right, everyone, let's dive right in. Today we're going deep on how Wall Street reacted to the latest U.S. inflation figures.
Sounds intriguing.
Our main source is a recent article from Boursorama, that French financial site.
Ah, Boursorama. Always a good read.
It really is. So this piece highlights how the New York Stock Exchange opened with a surge.
A surge, huh?
Yeah, the Dow Jones went up by 0.20%, the S&P 500 climbed 0.50%, and get this, the tech-heavy Nasdaq jumped by a whole 0.79%.
Wow, that's quite a jump, especially for the Nasdaq. Once you wonder what drove that.
Well, the article points to the November U.S. Consumer Price Index report, which, if you remember, came out just an hour before the market opened.
Ah, the CPI report. That makes sense. Everyone was waiting to see those numbers.
Exactly. And those numbers were a slight acceleration, with the CPI hitting 2.7% annually and 0.3% monthly.
And what about core CPI? You know, the one that strips out those volatile food and energy prices.
Good point. Core CPI held steady at 0.3% monthly and 3.3% annually.
Interesting. So both the CPI and core CPI figures pretty much aligned with what analysts were predicting.
Right on. And that, I think, is the key to understanding this positive reaction on Wall Street. Those stable figures may have calmed some investor nerves.
I see. It's like a sigh of relief, perhaps even a spark of hope that the Fed might ease up on those aggressive interest rate hikes.
Maybe. Now, this is where things get even more interesting. The article quotes David Miller, an investment director at Catalyst Funds. He predicts that the Fed is very likely to cut rates by 25 basis points on December 18th.
Wow, that's a bold prediction. Wonder what makes him so confident.
Well, the article mentions the CME's FedWatch tool, which, as you know, is a pretty popular indicator for market sentiment. It's now showing a greater than 96% probability of a rate cut next week.
96%. It's a pretty big jump from the 86% it was showing before those CPI numbers came out. It seems like the market is really buying into this idea of a rate cut.
So how do you think all of this will play out for individual companies, with this potential rate cut on the horizon? The Boursorama article mentions mega-cap stocks, especially those that are sensitive to interest rates.
Like tech companies.
Exactly. Think Tesla and NVIDIA. They saw some decent gains. Tesla went up by 1.77% and NVIDIA by 1.0%.
Yeah, that makes sense. Lower interest rates can make growth stocks, like those tech companies you mentioned, a lot more attractive to investors.
It's really fascinating to see how these big macro trends can have such a direct impact on those individual companies, don't you think?
Oh, absolutely. It's all interconnected.
The article also highlights some specific company news that I found pretty interesting. For example, General Motors decided to ditch their robo-taxi project.
Oh, the one that was part of their cruise venture.
That's the one. And let's be honest, it's been kind of a money pit. Investors seemed relieved by the news, and GM stock rose by 0.54%. What are your thoughts on that?
Well, it seems like companies are facing more and more pressure these days to adapt to market realities. Investors are definitely looking for signs that companies are making those tough decisions, especially when it comes to cutting back on risky ventures. They want stability and, profits.
Speaking of profits, the article covers GameStop, and, well, their stock soared by 7.35% after they reported a profit for the third quarter.
Wow, a profit. That's impressive. I thought they were struggling.
They were, but they've been focusing on cost cutting and pushing those high-margin products. Seems like their strategy's finally paying off.
That's a great turnaround story. GameStop's story is really a good example of turning things around, even when things look, well, tough. But not every company is having the same success.
You're right about that. The Boursorama article talks about Macy's, and their stock actually took a tumble, like a big one, down by 9.62% after they had to lower their profit forecast for the year.
Ouch. That's a significant drop.
And they're blaming weak demand, basically saying people just aren't buying as much.
That seems to reflect some of those wider economic worries that are still out there. Even with some companies doing well, there's still this feeling of uncertainty among shoppers.
Yeah, kind of a mixed bag out there. And you mentioned earlier that those stable CPI figures calmed some nerves, but the article also brings up some analysts who are still a bit cautious. What do you make of that?
Well, it's always good to look at things from different angles. While the overall CPI figures matched what was expected, there are still concerns about, remember, core inflation, the one without food and energy.
Yeah, I remember.
It's still a bit higher than people would like, and that's raising some eyebrows.
So even with a potential rate cut coming up, if core inflation stays high, what could that mean, for the economy as a whole?
That's the big question, isn't it? And it's something the Fed will have to think about very carefully. before making their decision about interest rates next week. It's a real balancing act.
How so?
They want to help the economy grow, of course, but they also don't want inflation to get out of control.
Sounds like a tricky situation. So let's imagine they do decide to cut rates next week. What might happen in the market?
Well, a rate cut would probably give the market a boost, at least for a while, especially in sectors like tech and real estate, which are really sensitive to interest rates.
Right.
But it's not that straightforward. Lower rates could actually make inflation worse over time, which could then lead to more ups and downs in the market. It's complicated, lots of possible outcomes.
And speaking of complicated, let's go back to those companies we talked about earlier. We've got GameStop making this amazing comeback and Macy's struggling. What can our listeners learn from these two different stories?
I think it shows how important it is for companies to adapt, to be smart about their decisions, especially in this kind of market. Take GameStop. They really focused on cutting costs and shifting towards products with higher profit margins.
Yeah.
They looked at what wasn't working and made some changes, and it seems to be working for them.
Kind of like they took a step back, thought about their situation, and then made some big moves to get back on track.
Exactly. And that's a good lesson for any business. Sometimes you have to make hard choices and change direction to stay ahead of the game.
Absolutely. And that brings us to the end of our deep dive into this Boursorama article. What are some of the key takeaways for our listeners?
Well, I think one of the most important takeaways is that even when things seem to be going well, like with the CPI figures being in line with expectations, there's still a lot of uncertainty in the market. We can't forget about those underlying inflation pressures we talked about.
And that brings us right back to the Fed and that big decision they've got to make about interest rates.
Yeah, the big one.
Think they'll play it safe and hold off on a cut or go for stimulating the economy?
Tough to say. They want to encourage growth, give the market a bit of a push,
Makes sense.
but they're also worried about inflation going crazy if they cut rates too much.
So they're kind of stuck between a rock and a hard place.
Exactly. Whatever they choose, it'll have a big impact, not just on Wall Street, but the whole economy. It'll be interesting to see how they balance everything.
Oh. We've talked a lot about those big trends, the overall picture, but those companies we discussed, GameStop and Macy's, it really shows how different companies are being affected by what's happening right now.
Yeah, that's a good point. Same basic economic situation, but their stories are totally different.
Right.
Really highlights how important those individual company choices are. Things like leadership, strategy, how well they adapt.
And GameStop, they were willing to make some tough decisions, rethink their strategy, and it seems to have worked out for them. Pretty impressive turnaround.
It is. It shows that even in a tough situation, companies can take control, make choices that change things for the better.
So as we wrap things up, what's the one big question that's on your mind after all this?
I keep coming back to this. Does this market upswing, with everyone expecting a rate cut, is it a sign that the economy is truly recovering, or is it just a temporary thing?
Interesting.
Are there deeper problems we're not really seeing? Something to think about, for sure.
It is, yeah. Reminds us to look beyond those headlines, really understand what's happening. Thanks for joining us for this deep dive. It's been great chatting about all this.
My pleasure. And to our listeners, keep those questions coming.